Carl. Welcome back inside the ice house.
It's nice to be back in the house.
It's great to see you here. All right. Well, this election cycle, of course, marked by President Biden's decision in July to not seek a second term, has been unprecedented. Before we talk about the November 5th results, how they might affect the markets and the economy, first I'd like to hear more from you as to how you've processed the unique events that have unfolded in the past 4 months.
Well, every election cycle's different. I'm thinking back to my first election reporting when I was on the John Kerry trail in 2004. And at the time, you had some things were very similar. You had foreign policy was a huge issue because of the Iraq War, which we were still embroiled in. Now you have Ukraine and Israel, where we're still exposed to those conflicts in various ways. You had in 2004 recent trauma with 9/11 just a few years prior. Today, recent trauma with the pandemic. And inflation has done a lot to damage the American investing and economic psyche. But other things are very different. I mean, the flow of information is night and day. Back then, candidates went on network TV, evening news. I was reporting for nightly news. Tom Brokaw was the anchor. That was how a lot of Americans got their information. Today, look at what we're doing right now. We're in a podcast. Harris and former President Trump are going on podcasts. Social media, worries about deepfakes, worries about misinformation. All those things have sort of disrupted the information flow, which I think makes this cycle difficult to price in for Americans and certainly for investors too.
That's what I want to focus on a bit more here as a co-anchor at CNBC. In the context of the perplexity that is out there today, how are you finding that investors are interpreting everything that we've seen? And how do you think that might impact investing ahead?
I think we've been asking investors all year long, and even back when the primaries were in full swing, how are you pricing in the election? And inevitably the answer was, well, we're really not thinking of it right now. It's going to be more of an issue for second half 24. And even the last few months, a lot of advisors and strategists will come on and say, yeah, we expect some chop. That's the phrase. We expect some election chop. And then once we move that, past that, we can get back to CapEx and earnings and cash flow analysis. So I think there's been this attempt to delay it as long as you possibly can because, as you say, it's been so unique and so uncertain. Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it, any way you want. But you look at betting markets, you look at certain polls. I think people want to blow off a little bit of political steam by making trades because so much of the actual polling data is within the margin of error. We really don't know what's going to happen.
Oftentimes, clearly during the debates along the campaign trail, we see many campaign promises from the candidates. Of course, based on the balance of power, those do or do not play out, of course, once the candidate is actually elected and assumes office. How does that work from an investing standpoint in terms of people looking at the markets, ingesting these promises, but knowing that sometimes they do not come to fruition? They cannot come to fruition.
Yeah, we're kind of in a silly season right now where both sides are making promises, whether that's no tax on tips or Social Security income. On the Trump side, on the Harris side, it would be about tax credits for small businesses and building 3 million homes, things that are difficult to do without, as you say, a sweep, or at least congressional support and backup, which is why the street's really more interested. They're obviously interested in who wins the White House, but they're really interested in if a sweep, either extreme of a sweep, red or blue, that would be market moving, to be sure. It also kind of brings up the point of tariffs, where you do not need congressional support to implement tariffs, and that's why the discussion about what tariffs would do to inflation and the long end of the yield curve and prices for Americans is such a contentious debate at the moment. We even had the Treasury Secretary today talking about the risks to long-term economic growth. Do you want to have the American economy wall itself off from the global economy? And what could other countries do in return if we implemented universal or certainly tariffs on Chinese goods? So you're right. Taxes are very cloudy. And I think the market's pretty wise to that. They're not really you don't see a lot of people making huge bets on taxes alone because they know that control of the House and Senate is going to make a big difference.
So among the sophisticated investors that you speak to on CNBC, and of course among your viewer base as well, do you think from an investing standpoint, it is tariffs that are the most important?
Well, it would be certainly in the early going. I mean, there's other things that can happen gradually, but tariffs could happen on day one. And there's been a ton of analysis on looking at the first Trumpian term where you had, say, tariffs on laundry equipment and what happened to the price of a washer dryer from the moment the tariffs were implemented and from the time they went off. And you can see a reaction in prices. Now, a Trump White House would argue that other countries pay that. A more democratic stance would be that it's passed on to the consumer. So we kind of have been through that ride before. I remember Wilbur Ross, the Commerce Secretary back in Trump term number one, coming on, and he held up a can of Campbell's soup and talked about the minimal tariff that would come. I think it was on aluminum, and his phrase to us was, "Who's going to be bothered by a penny or whatever the cost of that aluminum tariff was?" But if Trump wins, we'll be back in that discussion. We'll certainly be back, and it'll have an impact on how investors view global trade and maybe inflation and maybe rates.
Mm-hmm. Have you seen any economic projections on your show on CNBC as to how trade policy would impact the economy here at home?
That's a hard one. I haven't seen a ton of it. What the bigger discussion is what it would do to the deficit, right? I mean, you've seen, I think, 2 or 3 studies in the last, say, 2 weeks. One from the Responsible Budget Committee in Washington, just looking at what the damage would be to the deficit if either administration. And then neither of them are good. That's the problem. And that's why you sort of seen yields be a little stubborn at the long end, because there's not a lot of conviction that either side is offering measures that will reduce the deficit or the debt. And that's likely, some argue that's likely to keep a ceiling on the kind of prosperity that others argue the American economy is capable of, right? It's sort of a suppressant to our growth right now.
We've seen some instances during this campaign trail. It's been unique, to say the least, as we've laid the foundation of Vice President Kamala Harris distancing herself of late from President Biden. What do you think might be the implications there?
She certainly hasn't offered a lot of specifics on that front. I know she was asked about it on the Fox interview this week and said that her administration wouldn't be a continuation of his. But Bret Baier pressed her, on how, and she hasn't really gotten that granular yet. It's obviously in her interest to put some white space because, and we can go over all the statistics about why the American economy is outperforming every other developed economy, stock markets at all-time highs. American households have $50 trillion more in net worth than they did in 2019. And yet the sentiment, because of inflation, which is such a powerful psychological inhibitor, is why it's weighed on, say, consumer confidence. So she has a tough battle right now in trying to take a victory lap on things that this administration has done right, they would argue, and also the things that have been painful. And even you can tell people all day long that their wages are outpacing inflation and have been going back to 2019. Wages are above inflation, but no one feels like that because when you go to the grocery store, you see eggs, at 3 instead of 2. And that's a large number.
Mm-hmm. We had seen the Biden-Harris administration push through trillions of dollars in fiscal stimulus. Now, of course, if there was more gridlock in Washington, we might not have seen that the past 4 years. Many people have said to me that investors like gridlock in Washington. I'd be curious to hear from you what gridlock might mean and whether or not that is the ideal scenario for investors.
Well, the street doesn't like the street likes gridlock because it takes work to reprice any outcome, and the market's constantly repricing by the second the future. So if you were to have something unlike gridlock, where it was just a clean sweep, the market would have to rapidly adjust in its pricing, and that's difficult for investors to do, especially large investors who it's not easy to just get in and out of instruments all the time. So the market very much would prefer slow, steady, incremental, tons of debate, amendments, things that they can game out slowly. So it's just they don't want anything too sudden. Mm-hmm. That's really that's the story behind gridlock. And also, you take for example Harris. A lot of these fiscal programs that you're referencing, she was the tie-breaking vote, right? So in very small increments of voting might have made this situation, whether that's good or bad in your view, very different in the last couple of years.
Has there been much conversation on CNBC as to which president might mean something different for deal activity? For instance, antitrust obviously is a major factor in some of these massive deals that want to go through, including on technology regulation.
Yeah, I mean, the straight answer is that a Republican administration and Congress would be, because of confirmations and all of that, would give you agency personnel that would be more forgiving of M&A. So if there is a Trump trade at the moment, a lot of it might be in regional banks, which have been on a tear last few days because there might be more willingness to let them partner up. This Department of Justice and FTC have been really tough on American companies, especially the giants. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. And whether that means Lena Khan is out at the FTC, we don't know. But that would be a very clear signal that she is putting some white space between her and the White House we have right now.
Give us more of a sense as to what that could mean for business activity.
Oh, I think if you ask any large investment bank or people who were involved in M&A pipelines, they would say the kindling is right there. I mean, it's ready to burn. They just need to get past this date of November 5th and then past some of these appointments and confirmations of agency personnel. But I think it could be, I would say some argue it could be explosive if they got any kind of green light, because there has been sort of this pent up, we would do it. It's not about the price. It's not about the strategic fit. It's really about the regulatory friction. Not that it wouldn't get done. It's not that people are afraid the deal's not going to get done. but that it's likely to get challenged. And then do you go to court, and how much of a payment is there if the deal blows up? How much are you willing to put into the legal process and all that uncertainty? Investors hate that. So if you were to remove that piece, and assuming everything else was equal, pricing, strategic fit, willingness to sell among the sellers, next year could be very, very interesting. And of course, coming off a low base, you'd be looking at huge percentage increases in M&A volume, dollar volume, and deal volume.
We've heard former President Obama say that on the Democratic side, in past election cycles, the candidates need to be more moderate if they are going to gain a large voter base of support. You've been reporting on the markets and certainly election cycles for decades now. Do you agree with that? And do you think that we have seen that from Kamala Harris this election cycle?
I think you could argue that, yes, given her history, that she's not sort of a Scranton type Biden Democrat. She's more of a pragmatist California Democrat. That's certainly one image that's been used to describe her, that she's not maybe as pro-union as the president is right now. And maybe that's why she has not been able to secure endorsements from like the firefighters in Michigan, and the Teamsters have been a little recalcitrant, unlike the UAW, which is behind her. But I think you could argue that she's maybe a little bit less pro-labor in that, and then there's a new fashion Democrat. I also think what's really interesting regarding moderation in political views is, after COVID, you had a lot of people move out of blue cities and states when they realized they could work from anywhere. And they moved out of New York to Florida. They moved out of California to Arizona. They moved to Utah. They moved to Wyoming. They moved to Tennessee. I mean, we've done a couple of specials about the Nashville economy and some other select cities in the Midwest where I like to call it the purpling of America, where it's less harsh red and blue and a little bit of a mix. And in order to get those, and a lot of them are swing states. Arizona is a great example of one where you had a lot of Californians move in. Is that going to alter the calculus? You're probably better off being a little more moderate than going hard left or right if you're really zeroing in on that slice of independent voters who may in fact be new to the state.
Mm-hmm. We know that election years typically are positive years for the markets. The historical data certainly shows that. The economy seems to be humming along. Third quarter GDP coming in at 3%. To what extent do you think that tax cuts, if those are enacted after the election, could boost the economy alongside the expectation that interest rates or borrowing costs will be coming down?
You mean on the corporate side?
Yes.
Yeah, I mean, taxes are always so hard because we had tax cuts. Right? We had the Tax Cut and Jobs Act under President Trump, and everybody would do these hockey stick charts of corporate earnings just going to the moon, and they did well. But then there's always the effective tax rate which companies pay, which is much different than the actual rate. I think the market would be interested in tax cuts or a lower overall tax rate for companies, but it's not the only thing. I mean, if you think about everything we just talked about, harsh regulation out of DOJ, harsh regulation out of FTC, a president who was not a particular fan of capital markets in general, right? You would never see Biden doing an event at the New York Stock Exchange. It's just not who he is. It's not the image he was looking to portray. And yet, this bull market's going into 3 years. Right? I mean, to me, that's the most amazing comment on the power of American corporates, is they are so good. They are so smart. They have such good information. They have such smart people that basically they're going to weather all kinds of storms. I mean, will there be overshoots? Sure. Will regional banks find themselves in a mess because they mismanaged the yield curve like we saw in the spring of last year? Absolutely. But in general, they're kind of like a house that's built to withstand a Cat 5 hurricane. The rain comes, wind comes, floods come, and you'd be a fool to argue that American companies are not the best companies on the planet, especially now when we're seeing some real hiccups come out of Europe. So I don't think that, it's a nice argument on the margin, but I don't think that corporate tax cuts will be material to eat, S&P earnings next year, maybe by 1%. I think 1 or 2% is kind of, I think, what Goldman's been after. It would be helpful, but it's not a make or break.
I see here a highlight of Vice President Harris's tax policy does include raising the child tax credit to $6,000. Have any guests on your show spoken to what that would mean for American families and thus potentially the economy?
It hasn't been a focus, certainly in my part of the day, where it's mostly about earnings. We talk a lot of consumer, and we talk about the how much rising prices have weighed on the consumer mindset. Part of that is childcare, and a lot of that came from a weird hiccup in labor supply out of COVID, right? Where schools, a lot of moms, I'm saying because I happen to know this territory very well with my wife, had left their jobs. Childcare was an issue, and the cost of childcare rose a lot. So I think that's Harris's way of trying to answer for that. Her argument is your cost of childcare should only be a certain percentage of your income. So that tax credit is certainly aimed at that. And it kind of gets right to the demographics that both sides are trying to win over, right? Women, certainly Latinos, African Americans. It's all of these interests among a subset of the American electorate where these issues are really potent. And you can see why both campaigns are putting so much money and effort in trying to address them. That's just one example.
Has anything stuck out to you in the debates that we've seen so far that have changed the needle for the economy and or either candidate?
Out of the debates, I don't think we learned that much. So I don't think the debates were policy heavy in general. I think that's because so much of the discussion right now is that views are really hardened, right? The percentage of undecideds is really small. And so both campaigns end up relying on emotional arguments and events. Oh, he said something really crazy about her race, right? Or look at how she allegedly used a teleprompter at an event, right? It's almost simplistic marginal events that they think will tap into a voter's psychology. At this point, do we know anybody who's undecided? But, if I just knew more about her corporate tax policy, no, that's not happening. I mean, it's just that's how I see the race right now. It's late in the race. Both sides, barring Biden's departure, have had time to put out their policy proposals as specific or not specific as they're going to get. So it's a hyper emotional cycle. And at this point, telling me more about even tariffs. Tariffs are, as we said, a big issue, but I don't know if it's going to move the needle on a voter. It might be more about whether or not you think either one is crazy. And sadly, that's kind of where we are.
You were talking earlier about the trauma that Americans have gone through, and I agree. Certainly the pandemic for many Americans, many around the world, was a traumatic event, how that unfolded and the aftermath of that. Inflation then could have been its own traumatic event that many American families are still grappling with, even though we have seen that inflation rate move closer to the Fed's long-term 2% target. Now, Fed Chair Jerome Powell has forecast that more rate cuts will be on the horizon. I'm curious, with the economy growing as quickly as it is, if those rate cuts might be in question and what a Trump presidency or a Harris presidency might mean, knowing that the Fed is still an independent body.
Yeah, I think it's generally accepted that rates would be higher under a Trump presidency because of tariffs and what many economists would argue would be hawkish pricing on goods, at least on the goods side. So there's that. But I don't think the street, at the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, I mean, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we have this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market will be disappointed if the growth slows down to a large degree. And with Atlanta Fed today at 3.4 for Q3, that is not a slowdown. And if it means fewer cuts, I think the market would be just fine with that. I think we're having discussions now about what if they skip? What if they skip a meeting, which was not the consensus in August? I think the market would be, you know what, we get it. Jobs didn't really, the job growth didn't slow down that much. Consumers super powerful. Gas prices are where they were a decade ago. What's wrong with that picture? If you want to pass on a hike or a cut, that's fine with us.
An economist recently mentioned to me that given what we've seen with these devastating storms, hurricanes Milton and Helene, in addition to striking workers, notably at Boeing, for instance, that this upcoming jobs report that we would get just a few days before the presidential election might be politicized. Based on your wealth of knowledge here, do you think that that could move the needle come election day, knowing that that report might be lower or even negative given people out of work amid the strike and the devastating hurricanes?
I guess it's possible. Right now on the street, everyone is writing the next few data sets will be noisy because of the storms. And I think at this point, we've had Fed Chair Powell for a while now. And if there's one thing that he's tried to condition the street for, that is, it's not about any particular data point or jobs print or Fed meeting. It's about the trend. And I mean, it would have to be a crazy non-farm payroll number, I think, to call that overall thesis into question. I haven't heard anyone suggest that we get a negative jobs print for the month. Although I do remember, it's been a year now that we've had these calls for recession really heat up. And I remember hearing some investment bank research desks last year say, oh, we're going to have negative jobs prints by summer 24. And of course, that never happened, didn't come close to happening. So yeah, the storms are going to have an impact, just like Hurricane Beryl back when we were on the B's this hurricane season kind of did a weird thing with jobless claims in Texas. And there was like a 5-minute debate about, is the job market really that weak? Or does it have something to do with the fact that millions of people were without power for 2 weeks? So the streets, I always give the street a ton of credit. It's very good at tuning out the noise. And, obviously there's people get price things wrong. But street's been if you look back at the last couple of years and this bull market and everything that's been thrown at it, from Ukraine to inflation to the election, it's kept its eye on the ball. And that really is a testament and a tribute to American capital markets. No global capital markets structure has that kind of intelligence, in my view.
Of course, we'll see how the balance of power shakes out in D.C., but cabinet appointees can make news in and of themselves, be effective spokespeople for the given administration. In your following and covering of election cycles over the past decades, do you think that cabinet appointees could be effective here in helping the administration get its point across insofar that it would impact the economy? Any particular cabinet members in elections past or presidential cycles past that you've witnessed have had an impact?
I guess I would turn it around and say, can you name any cabinet official in the last 15 or 20 years who you think back and you think, wow, that was one powerful cabinet official? And the answer is probably not. Because, they are, especially in a Trump case, I would argue, beholden to the executive. He leads the charge, and no one speaks out of turn. But even under the Biden, maybe Buttigieg has been sort of a good vocal surrogate, for the last couple of years, and he's had some transportation stuff to deal with. Labor, has had some strikes, and there's been the ports and supply chain stuff. But I really think the power of cabinet officials is probably overstated over the long term. it's probably maybe, DOJ, FTC, like to our earlier discussion about antitrust. That's probably where you see the most. They always say, personnel is policy. And that's kind of where you do see that play out the most. But for the most part, I think the cabinet is the president's team. And what matters is what the president thinks.
If former President Trump loses the election, how is your network, how are your viewers, your guests preparing for that to unfold? Do you think we will have an answer on election day? And do you think the former president would accept that?
I don't know. I doubt we'll have an answer. We were talking about this the other day, how this last election, we didn't know until, I think, Saturday, when we had several important races called on election night. And famously, when Fox called Arizona, everybody talks about that one. But I doubt we would know for a few days just because of how early voting and counting has evolved over the years. I have no opinion on what happens after all of this. Obviously, courts will have months to handle and process any kind of objections, which we fully expect. I think back to and it was funny because it was in 2020 when we were still doing the shows from home. I don't think we were back here yet, where we were looking at reports I remember one out of J.P. Morgan sort of gaming out, will Attorney General Barr impound election machines? Like really off the wall stuff that was unnerving. But we sort of been through that, and I think a lot of the street's policy infrastructure will be sort of warming that up, offering scenario A, B, and C. But anybody who comes on here and tells you what the response is going to be from either side on a win or a loss, I'd be skeptical.
I just want to go back in conclusion here to talk about, among the interviews that you do, the reporting that you do, and clearly the anchoring that you do on a daily basis. What do you think are the top issues to voters this election cycle?
It's always the economy. I mean, I think, just because people live it every day, it's very personal. It affects it affects people you love, incredibly powerful. The argument about democracy, some say, is a political loser. People don't really think about it that much on a day-to-day basis. I think for a certain part of the electorate, January 6th was very upsetting. And that his inaction that day, we saw this on the Univision town hall last night, still is stuck in people's minds. What happened that day? How do we make sure it doesn't happen again? That was so unlike us as a country, given our history. But I don't think there's any way you can ever replace money. And I think it's actually one of the reasons why people always say, why'd you become a financial journalist? And my first internship was at the Wall Street Journal when I was in college. And the thing I learned right away is that money is it explains every human emotion. It explains greed, insecurity, anger, fear. It's got so much of humanity, of human psychology wrapped up in it. It's what makes markets so interesting. What makes our jobs so interesting. And I think in the end, it's what drives election cycles. It really is about people and whether or not, because it's scarcity. You don't want to have scarcity when it comes to your money. It must go back to some deep thing in our ancestors' brains, right? That we've retained, that you need to take care of your stuff. And I think that's why it'd be hard to topple the economy as issue number one.
It's so good to get your take, Carl, of course, on the economy, on this political race, and we'll see what unfolds as we get closer and closer to Election Day.
Buckle up.
Buckle up indeed. Carl, thank you so much for joining us inside the Ice House.